So in current uncertain economic situation, why it's important for you to understand the biggest debt trap that US is stuck in, and what as an Indian investor you should do in such kind of situation. We'll basically try to understand this by analyzing what the bigger institutions and the top 1% of smart investors are doing in such kind of situation. And we'll try to replicate their portfolios or their strategies in our microcosm portfolio or strategy. In this video, I'll basically try to answer one question. As an Indian, what you should do in such kind of uncertain financial situation. For that, you need to understand what is the biggest debt trap that US has stuck themselves into. Just to get the context of what is US debt trap actually is, we need to understand that currently US is paying $3.3 billion as an interest payment per day. And in total, they have $33 trillion of debt on their head. Some economists also says that this can be internally plus externally, there can be more than $100 trillion of debt on them, which is very huge amount if you consider. And it's not stopping due to war and all economic uncertainties. The debt is increasing year on year and day by day. So why this is important, why the US debt matters us that much. As an Indian, you should not relate it to US debt, right? But that's not actually true. In today's world, global trade is mostly dominated by US dollar as a currency. A lot of global transactions and trade happens in US dollar. So a country which supports US dollar collapses or fails to make its interest payment, obviously there will be bad repercussions on US dollar itself, which in turns collapse the whole trade or supply chain that is distributed throughout the global systems. And it's not a single isolated event that will take place. If US fails to repay back that interest, we'll see a cascading effects on all the second world, third world countries, because a lot of foreign investors take money from this Western markets and pour that into third world and second world countries due to better interest opportunities or better return opportunities. That's why looking at US debt is important for to understand your own situation. The next big thing other than debt is the inflation or the money that the US government is pouring into the markets. They're basically inflating the dollar or depreciating the value of dollar over time. If you go back to the 2008 crisis and compare it to 2026, the dollar has inflated or depreciated by 50%. And most of that 20% comes from the recent event that happened, that is COVID. During COVID, to boost the economic activities, US basically pumped a lot of cash into the system. But this cash just flowed into the stock markets. That's why we saw rallies in global markets, and even in Indian markets we saw a quick V-shaped recovery. That was not a fundamental recovery of markets. That was just money flowing from this Western countries to third world countries. And at some point, they have to repay back those money with interest. So it's certain that foreign institutional investors will be removing their money once they have made money into our market. They will just remove their money and just go back and invest in something else. That's why we are seeing this fall right now. It's not something difficult to understand. Keeping the fundamentals aside, let's try to answer the elephant in the room or the biggest question in the room. Like, as an Indian investor, what you should do in such kind of uncertain situation where not even the top institutions and top investors know what is going to happen. So basically, you have to prepare yourself for a black swan event like COVID, but in bigger proportion compared to COVID. So how you should prepare for that? To prepare for that, you should look at what bigger institutions and top 1% investors are doing with their money. The first thing that we saw, a lot of governments as well a lot of top institutions are doing is buying physical gold and silver. And the recent rallies in gold and silver that we saw is due to this, because they are fearful of the debt as well as the uncertain economic condition due to war which is happening in the Middle East. So that's why a lot of this money is moving into physical assets like gold, silver, sometimes copper, aluminium, or countries producing this copper, aluminium metals. Basically, a lot of institutions are going and buying the country's currencies because AI is a narrative that has built up throughout the world right now. And a lot of institution investors and top investors are chasing the currencies of country who produces a lot of physical materials like copper and aluminium. The third most common thing these investors are doing is investing in private equities or giving private loans, VCs, funding startups, funding AI related startups, investing in energy. Also, they're investing in defense sector because a lot of institutional black swan events or black swan events happen during war situation. So a lot of investors are thinking that maybe this we can capitalize on defense stocks. So a lot of them are buying defense companies and investing in them. And the last and the most common option that a lot of defensive investors are doing is holding a lot of cash or investing in very hyper liquid funds. In Indian context, these are not FDs, these are not PPFs, these are very high debt funds which have an interest rate of 7 8%, but are very liquid. You can take out the money in 1 2 day basis. So cash and liquid funds. And why they are doing so, I will explain you in the coming points. But other than this top investors, let's take some specific names from big investors in US and big investors in India, what they are doing. Let's see Warren Buffett, what Warren Buffett is doing. He has more than $340 billion of cash lying around just to capitalize on any opportunity that he sees. If there is a black swan event, he will just pump money into the markets, whatever cash he has hoarded right now. The second person, which is Michael Burry, who predicted the 2008 crisis, what is he doing? He's basically shorted all the hardware companies like Nvidia because he thinks that these hardwares are depreciable and they don't have long-term value. So he's trying to short these companies. And on top of that, he's also investing in software companies which has already seen some downtrend. So he's basically doing some positional trading based on market sentiments. You will ask me what are the big bulls in India are doing, the Adanis and Ambanis. They are moving into green energy because they want to get away from oil. What about Nikhil Kamath? Is he doing? Nikhil Kamath is basically investing in energy related products, green energy. He's also betting a lot of his money in cash as well as discretionary products, silver and gold businesses, not investing in gold, but businesses related to jewelries and etc. And also investing in a lot of discretionary products like cigarettes, alcohols, and lifestyle products. Because during a downtrend, these products will always have demand because nobody will stop buying alcohol, cigarettes, or biscuits or groceries. So this will never stop. So the final question, what I and you as a small investor do in such kind of situation? The first thing I would suggest you not to do is go and buy gold, silver, or anything such which has already exploded. Don't buy at top. Always look for opportunities in the bottom of the charts. You can go and try analyze copper and aluminium. I'm not too into copper and aluminium, but if you are interested, you can go and look for opportunities. But I think it's already ran off, so you have to be careful at that as well. The second thing you should not do is try to lock your money in PPFs or FDs because during uncertain situation you don't need a stable return, you just need a liquid fund to invest money in. And due to inflation, these products are not at all good opportunity for you. So try to avoid this kind of investment vehicles. You can try to look at crypto if you want to capture some global volatility in software sector, as well as you want some crypto part of your portfolio, then you can go and expose yourself a bit to crypto because right now crypto has fallen, so you have good opportunity to accumulate at this position. Obviously this is not financial advice, but you can do your own analysis and look for buying positions. And last thing you can, as an investor, you can do is put your cash in a very liquid fund and always be prepared for a black swan event. These black swan events can happen at any time and you cannot predict those. You have to be prepared for it. There is a saying in the 2008 crisis that The money moves from the unprepared to the prepared. So if you are prepared even 50%, you'll still protect your investments. So if you see a market fall, you just put your money into it. If you have cash positions, try to reduce the cash positions, and you can try to adjust and play around that. And last point I want to cover is like, what are my strategies in this kind of uncertain situations? And I will be very honest with you. I think my 80% of my portfolio is in cash right now, which is in liquid savings account. Some of my investments are in crypto, and some of them in Indian index funds or stocks. And on top of that, I'm doing a lot of positional tradings, because as a market as a whole, I don't see opportunity, but there are a lot of pockets of money making opportunities where you see a lot of software sector has already been corrected like 30-40%. So basically I do positional buying there and try to make like 10, 15, 20% of return over a period of 6, 7 or 1 year. Let me know, what do you think about this? What type of investments you are doing, and what are the risk management steps are you taking for a black swan event which may or may not come, or are you prepared for that? Let me in the comments below. See you later.